Bob, just in the past couple of hours, we had the JOLTS number not going the way that certainly the Fed wishes. And I mean, I don't know, is it turning out, is the labor market at least turning out to be a lot more resilient, and hence the fears that there's more wood to chop?
Without question, yes. And we've heard that from Chair Powell last Friday. It's the economy is weakening in some places, but the labor market remains strong, and that has to crack before the Fed is finished. There's still too many open jobs for people looking at them, and that's what's causing this concern that inflation is not going to disappear anytime soon.
So when you say de-risk, what do you mean? Get out of stocks?
Well, have a lower weighting than you might otherwise have. I'm an equity investor, so usually fully invested. So it's what do I do? I have a lower beta than usual. I have a higher dividend yield than usual. Higher predictability of earnings. Just a more conservative portfolio, even within tech.
Bob, we're seeing income inequality in a way in society play out in the markets. It seems to me the better paid consumer is faring better in this environment than the working class or even poor consumer. How much does that reflect what investors should be investing in? Probably the prime luxury stock in tech is Apple. They build premium phones, premium computers, and sort of have to rely on innovation to make it worth it. That's their margin. If they can continue to do that, and if the luxury consumer holds up, they might continue to do well. Is that something investors should be betting on or against?
I agree with the thesis. That is, just take food and energy. Who spends the most percentage of their income on it? The poor. So they're getting hit the hardest. So I agree with your notion. If you can lean toward companies that have potential for driving innovation and higher ticket items, you have a better shot. But even those areas are struggling as well as the economy weakens.
Bob, I know we're focused on the JOLTS number this morning and certainly the jobs report later this week. But what about inflation data, which is trending better? Are you in the camp that the Fed could overact here and perhaps push the economy into a recession needlessly?
They could. I think it's too soon to argue that. There's a huge gap between the Fed funds rate and inflation. Inflation did peak in the second quarter. I think it will continue to fall irregularly for the rest of this year, taking us to a 4 to 5% inflation rate. Still unacceptable, but better than where we are. And that's when the going's going to get even tougher for the Fed to figure out what to do to try to thread that needle, engineer a soft landing, which we know is pretty difficult. Not many chances we've had that happen.
Bob, 10-year 313. I do wonder, though, where you think that tops out. And if it doesn't get, say, to 3.45 or 3.5 again, can people start talking about a potential double top, at least on the benchmark?
Yeah, so the 349 we saw a few months ago, I don't think that's the end of raising rates. We're in a period now where the economy slows, inflation's falling, so I think bonds are going to be trading vehicles. But I think before this cycle is over, meaning into next year, we're going to see higher yields across the whole spectrum of the curve as inflation stays stubborn.
Bob, what is your read on enterprise spending, business spending? I'm particularly interested in technology, but we've got a few different notions floating around out there. Intuit last week just announced a really strong quarter on SMB. There have been some businesses also in software, Microsoft, for example, that's shown some strength in software spend. But at the same time, when it comes to equipment, Dell, we got HPE coming, not as stable.
So there's no question capital stock in the U.S. in general is old. And that's why you've seen the capital spending cycle be a bit better. And I think it won't fall as much as it typically does in a recession. And when you get to technology in particular, software services, I think money will be spent there as labor is becoming more expensive. So I think there's some rays of sunshine in that little piece of tech, if you will.